Hello and welcome to Macro Point of View, first episode in 2024. Let's start it and see what's going on the global markets. In today's episode, we'll start with the current situation on the gold, which is rising after yesterday's combined United States and United Kingdom attack on Houthis in Yemen. It's a retaliation after many Houthis attacks on the cargo ships passing to the Red Sea. And it's because the Houthis are against Israel operation in Gaza, against Palestinian. So now the conflict, first it expands from Israel-Hamas war into the Israel-Liban war, as there were some Israel attacks on the Liban capital, and also one of the Liban's Hezbollah leaders died in Israel attacks. Now it's expanded by the other side, by the third party, which is United States and United Kingdom, because Houthis were attacking cargo ships, causing massive redirection around Africa, and now United States and United Kingdom provide an airstrike on several Houthis locations. The question is if Houthi will see this as an opportunity to stop attacks or to turn back in arms supporting Hamas. But according to many analytics, it won't happen. So there is a chance that it will become a full-scale war on between United States, Great Britain, and Yemen, as it's a very problematic thing for United States, especially because we've got presidential election in 2024 and there is rising voices in United States against Israel operations in Gaza. So I think there will be a problem if Houthi will call those airstrike as a bluff and will start retaliation against US troops in area or US allies in area, which means they might attack Saudi Arabia. So there's an escalation in hand, and I think we have to wait till Monday to see if this escalation will proceed. For the moment, the market is reacting slightly, as we've got only $9 rising prices, $10 rising prices on the gold, but we can take a closer look on a Brent oil, and as you can see, it opened higher as market is anticipating what I just said, that this US-UK Yemen war might escalate into the another Gulf war to be a problem for oil transportation or oil production in OPEC countries. So this is the oil that will react, and we have to focus oil and gold prices on those circumstances around Yemen. So we take a closer look, take it steady, because we don't know for sure what Houthis will do. So please be very, very careful while considering any kind of positions for oil and gold over the weekend. As please remember, you have no control if anything happened during the weekend. You have to deal with the gap on a Monday, whatever way it's gonna be. And the third instrument I wish to talk about is corn, because we have huge changes in those markets recently. First of all, Argentina. In Argentina, We had some storms that killed over a dozen people in Argentina, but it served a purpose for the corn because now Rosseo Grains Exchange claimed that will be at least 3 million tons of corn more in the current season 23-24, which should be 59 million tons. And we're gonna take a look closer because now it's the sowing time for the corn in Argentina. So it's a bit earlier to be it for sure, but more corn from Argentina means that this area we are between from August 2023 till end of December 2023. Now we are dropping down, and I think this line around 475 cents gonna be an obvious stopping point for the corn prices, especially that, the Brazil corn forecast made by CONAP shows that we're gonna have a huge amount, but lower than previous forecasted, of corn in current season because they said it's gonna be 117.6 million tons and the export will drop to 35 million tons. It was 56 million tons in the season 22-23. Yet we've got also 43% drop of the import of corn to European Union in this currently season. So I think it's gonna be balanced with less demand from United Europe, and it will be somehow balanced. But still, 35 million tons export of corn from Brazil with rising export from Argentina, rising forecasts of production, which for be followed by rising export, is probably pressing the prices more. So I'm not expecting at all to cross over 550 cents in this season with the current levels of any forecasts. Yet I think it will be very, very hard by the corn prices to cross over 500 cents even. So I think we are on, as SMI 55 seen on this chart, I think we are very, very close to drop even lower. And if we change it to the weekly side, we can take a look that before 2021, you can see, of course, we've got here pandemic area, but as you can see, the current level, something between 2017 and 2000 end of 2020, the current price level was the highest for those 4 years. And as well also 2014, we have to go back to 2014 to be higher than the current prices. So I think it's a very huge chances that the price will drop even further down to even probably 400 cents in the currently season. So I take a look on those three markets at the moment because I wanted to make it short, I make it quick. Please stay tuned, please subscribe for more information for the macro point of view, and we're gonna keep you updated with the many things we can see on the charts currently for us. Thank you very much, don't forget to subscribe, and have a nice day.